Let me ask you first of all about the exchange and who's investing in it these days. Is it a global exchange?
It is the global exchange. So we consider ourselves to be one of the, say, leading exchanges globally. We trade most of the asset classes which can be traded on exchange: equities, fixed income, FX, derivatives, commodities, and whatever else is there. And yes, I mean, the investors that we're seeing actually is, I would say, the usual suspects. So we would have foreign investors, which will be up to, say, 40–50% of the equities market, about same 40% on derivatives market, and then local investors and Russian banks.
I mentioned the sanctions that have been levied against Russia. Right. What effect have they had? I know that GDP here has declined here. I think we have a chart showing a bit of that over these last few years. What effect has that had on the market and on businesses there in Russia?
Actually, there is a point of view that the sanctions were in some way good for Russia. They've let the market and the, say, Russian economy get prepared for the drop in the oil price. So Russia started deleveraging itself earlier than the oil price drop happened.
Just out of necessity. It had to be because of the sanctions.
Just because of the sanctions effect. So when the commodities price dropped, Russia was already deleveraging, so more or less ready for this drop. So Russia is not in a crisis; it's in recession. That's a fact. But it's in a fairly good form. If you look at this, the budget deficit is low. So the ruble is fully free floating. Basically, it's in a free float, and actually is a first line of defense against the external shocks. So the economy is adjusting. If you look at the sectors, I mean, I would probably think about just construction, which is suffering these days. But the rest, I mean, the exporters are doing fine. I mean, their ruble prices are where they were before, and the budget is balanced. So, and the government is actually doing very reasonable steps in terms of its market policies.
I think investors here will read the news, they'll see the news, they'll see news about Russia and Syria and worry about instability and how that might affect things. Is it beginning to trickle down? Is it affecting you?
I wouldn't say so. So basically we are the center of the market. So to the extent possible, we are staying away from the politics. We're focused on the efficiency of how market should function. So that's what we care about. So what we care about is it easy for investors to get in or get out, and how we protect the property rights, basically.
Just lastly, we had the head of the Russia Standard Bank on Bloomberg TV a few days ago, and he said that funding costs have gone up. Is there a way to bring those down? Is that really an issue?
Yes, and actually they had gone up, but I think we think this is a temporary spike. So if you look at the annualized inflation these days, it's below 6%. So the central bank is saying that they target 4% by 2017, and I'm perfectly confident they will get there. So for Russia, the low interest rates is important. So the funding for the economy will decline, the funding cost will decline, and actually that will spur growth, I think, earlier than people anticipate.